I welcome in my good friend. We've been here forever and a day here on the floor of the stock exchange. Ted Weisberg's with us, founder, president, Seaport Securities. Good to see you, Ted. How are you? Teddy's here. So what are you thinking about the markets? Are your clients calling you and saying, Teddy, what's going on? It's all down arrows.
Yeah.
They must get nervous because August, September, October traditionally are weaker months anyway.
Well, I don't know about the traditional part of it, but certainly September so far has been an underwhelming month to be kind. Listen, there are so many issues out there. What I find particularly frustrating about where we are now is that all of a sudden the focus has turned almost completely to the 10-year and interest rates. Yeah. And you got to wonder where these folks, what rock have these folks been hiding under for the last 3 or 4 months, because the direction of interest rates has been relatively clear. The frustrations of the Fed, and we've talked about this in the past, the tug of war between the fiscal policies where the government continues to spend money like a bunch of drunken sailors, and then you have the Fed on the other side of the equation trying to rein inflation in and raising interest rates. So you've got two huge factors pulling on the same rope in opposite directions. But clearly the 10-year and the direction of interest rates for some odd reason has finally hit home. And all the negative ramifications of higher interest rates. Yeah. So it's bottom line, it's been a difficult period. Sure. Even today, we see some green on the screen, but you have to wonder if it's just a little technical bounce over oversold position, because quite frankly, nothing has changed. I mean, it would be nice to see equities rally. The good news is, I guess, we're coming to the end of the third quarter. And so soon we'll be going into earnings, and on balance, earnings usually come in better than expected. And the markets in general seem to do better during earnings reporting season. And that's just a couple of weeks away. So perhaps that's something positive to look forward to.
So people shouldn't have been surprised by the Fed's higher for longer. That's what he's been saying the whole time anyway. So you're not surprised. At this point now, when you're trying to search for value, what do you tell folks what to do or not to do when it comes to their money? I know there's short-term and long-term advice, but what do you tell them?
Well, I'll say this from a practical point of view. Everything that we have tried to do in terms of equities so far, at least this month, has been wrong. No matter what we have done, we've been wrong. And I suspect we're not alone, but I can't speak for everybody else.
Oh boy.
In the way it's been a very difficult period. So, and we've seen our order flow at Seaport basically dry up as the markets get more difficult, get more frustrating. The clients aren't stupid. They basically just kind of push themselves away from at least the equity table. But the flip side of that is, and we've been in this trade for months now, is the short-term treasuries. Now, there's nothing unique or unusual about that, and all of a sudden it's become the go-to trade. But the fact is, you can get 5.5% from 3 months, 6 months treasuries with virtually no risk. And when you don't know what to do, sometimes the best thing for investors to do is simply do nothing. Yeah. If you press, you're going to make mistakes. You sort of need the wind behind you, not in your face. And right now, I don't know if the wind is neutral but it's certainly not behind us. And it's just a difficult period. Now, maybe we've seen the end of the weakness. I don't think so, because until we see some light at the end of the tunnel vis-a-vis interest rates, and we have to make sure that light at the end of the tunnel is not a train coming at us, but in fact is some sort of relief. It's just a difficult environment, Nicole, and you'd like to be very smart, and we're value investors. There's plenty of choices out there for value investors.
Let's get to some of your names. I mean, you talked about Chubb, different times that you've been on. In fact, it has been moving higher since you mentioned it, and it's a name that you still like, right? 1 year it's up 19%. Where do you think, what kind of upside potential do you think a name like this has?
Well, because the whole insurance sector is a big sector, and it's probably a mistake to pick on one name, because there's plenty of good companies within the insurance sector. But we like the sector because we think it's a sector that has two things. Number one, pricing power. You know, every time there's a lot of claims in insurance, all they do is raise the premiums. So, you know, they have one bad quarter and then they're, you know, they're kind of going forward in a positive way. But the other is insurance companies have huge reserves by statute. And in a zero interest rate environment, those reserves basically weren't returning any real money. But in the current interest rate environment, those reserves are money in the bank. So you want to own companies that can take advantage of the current interest rate cycle and at the same time be in a position where they can pass along price increases, and insurance is one of those areas.
Look, it's at 213. RBC has a 245 price target. They reiterated their overweight or outperform on this recently and said compared to the peers, it was looking good. Visibility around mid-teens return on equity, strong earnings per share power. So they like this one well into 2024. So you're on the same page. What about when you look at some of these energy names? You have Exxon and Occidental Petroleum.
Well, we've always had exposure to energy. We just, we don't, I mean, listen, I understand the whole EV thing, but I don't think the world is going to abandon energy for any time, certainly in my lifetime, which is a lot shorter than yours. But the fact is, energy is not going anywhere, in spite of all the political rhetoric and the philosophical rhetoric. Now, it's kind of an obvious play with oil at $90 and not $50. You don't have to be a rocket scientist to think you want to be long energy stocks. But the fact is, they still represent relative value. Now, you have to make a bet on where you think energy's going. We happen to think it's probably going to stay in this area or work higher, but that's just our opinion. But most of the big energy companies pay very generous dividends. So you're getting paid while you wait. And clearly, for whatever reasons, you know, oil's at 90, not 50, and is it going higher? I don't know. There are some folks, I mean, I heard a number today that I'm a little embarrassed to repeat, but somebody said they read someplace where oil was going to $300 a barrel. I'm not sure that that's quite accurate.
How quickly will that happen?
Yeah, well, I mean, I think that's a lifetime issue, right?
Million. Well, we'll see. I mean, you never know. There are people who come out with some really bullish, big calls.
Well, you know, Nicole, even a broken clock is right twice a day, so I'd be careful about those outlier projections. But clearly, oil is a good place to be at the moment. Yes. Okay,
Teddy Weisberg, thank you so much. Ted Weisberg of Seaport Securities. Thank you for being here.